going on with us. This is the market. Let's connect with our chartists to find out their top recommendations as well as where they see the markets headed. Well, yesterday, after all the give and take, we managed to wrap up at 12,926, making our way towards the coveted 13,000 mark with a lot of resilience within the broader universe, and RIL as well as IT and Pharma clearly contributing. Let's connect with Kunal Bothra as well as Naresh Mirani to find out their views as to where we're headed. And Kunal, give us a sense as to whether or not you believe that this sort of a momentum is here to stay, and share with us what is some of the interesting picks on the charts.
So good morning, Avan. Yes, I think the momentum is here to stay. We've seen very good balanced reaction from the market. So yesterday also I was mentioning that this is a very mature kind of a reaction from the markets overall, because it's a matter of one or two sectors trying to perform. So if Bank Nifty, for example, which yesterday didn't perform, you had the other sectors like the ITs and the pharmas which did pretty well to support. I think what is also the hallmark of the last 1 week or the last weekend, yesterday's rally, has been the resurgence of the mid-cap names yet again. So, you see a lot of mid-cap names which are trying to complete their chart patterns, their bullish chart patterns, break out on the upside, and you see a follow-through price action into these names. And that generally happens when the market breadth tends to open up. So, when you look at this in the entirety, I think it's a very balanced kind of a market reaction, and it whiffs off that this momentum is here to stay and continue. I think 13,000 mark would just be just a landmark as such. I think what's more important is that the global rally continues, and the rally continues from here on itself. So I think 13,000 is just I think 40-50 points away for the index, but I think what's more important is sustaining and crossing about the 13,000 mark. I think is something which is very important. Now in that regards, I would suggest two buy calls, and I think the focus today would be on the IT pack, because you saw a very good comeback from the large cap IT names yesterday. So I would pick up Infosys as the first stock as a buy. The stock managing to form an inverse head and shoulder pattern on the short-term time frame charts. So I would suggest a buy with a target of 1166, stop loss to be kept at 1122. And the second would be a buy on EID Parry. As I said, that many of the mid-cap names have started to show signs of very strong signals of breakout and a follow-through momentum in them as well. So EID Parry as well has managed to come out of almost a 3-month consolidation and very good volumes as well. So I think I would suggest that as a buy. Targets to be kept at 345 and stop us at 315.
Okay, there you have it. Let's get a move on then. Naresh, would you agree that the resilience in the broader markets as well as the sense of, overall sentiment as well picking up? And what is it that you're looking at on the chart? Some interesting bets for our viewers?
Yeah, if we look at last week on 17 November is when we crossed about 12,900. And since then, we are still around the 12,900, 950 marks, making a top around that prices for a week. But in the same period, the BSE mid-cap, the Nifty mid-cap, the Nifty small-cap, all the indices are up between 3 to 6%. So that tells you where the shift has been, and it is clearly seen in terms of how the momentum is shifting to the broader market. Even in the Nifty, if we look at Nifty, Nifty is still around the 12,950 mark. But if you look at the Nifty 50 equal weight, that has finally made a new all-time high. And it has started sustaining in the last 2 days. So it has crossed the mark which was made in the last 1 week on the Nifty 50. So what we are seeing is a broadening of the market. So we are in a 200-pointer range on the Nifty. If we break out about 12,950, we go to 13,150, 13,200 levels. And similarly on the downside, whenever we break about 12,000 below 12,550, 750, we could be looking towards 12,550. So that's the overall range. And on a broader aspect, we are also seeing the dollar index trying to make bounce backs from 92. Once that goes off in a longer term way, we could continue to see the flows to be structural on the foreign side. So in the near term, we continue to look out for mid caps and small caps, keep looking out for laggards, where there would be a lot of catch up. So the couple of stocks which I have today is one is a buy on Torrent Power. Now this is one interesting stock which was the first one to actually cross pre-COVID highs in May 2020. Since then, it has been struggling ever since and made quite a few bottoms around 295, 300 levels. Finally, yesterday has shown some signs of momentum. So taking a stop loss at 304 and a target price of 330. And once that crosses, we could be looking at a much bigger move. So that is a preemption of a larger move in the trend. The second one is a buy on Coal India. We've seen the PSU sector stocks giving breakouts in the last 1 week. And Coal India gets masked by the fact that there is a 7.5 rupee dividend on the stock. So it has actually crossed the highs of 129 last week, although the current price will look at 123. So at current prices, it's a nice continuation of momentum. You would expect a quick move to 130 and say in the medium term to 150. Keeping a stop loss at 120, that makes the risk reward very interesting.
All right, watch out for Torrent Power as well as Coal India. Those are Naresh's top bets. Let's get a move on to stocks and news then, and watch out for some of the two-wheelers. JP Morgan is rather cautious on that basket, particularly Eicher Motors and Hero Motocorp. Let's take it across to Vinny to find out what the brokerage has to say. Vinny?
JP Morgan is cautious on the two-wheeler space, and they believe that it's not a smooth ride ahead for the two-wheeler sector in India. So overall, they've downgraded Hero Motor to a neutral stance, while Eicher Motor they've downgraded to underweight. Now, what are the observations? They believe, according to the channel checks, that the tailwinds which the two-wheeler sector was seeing, that is for if you go to see the pent-up demand that is seen receding, channel restocking as well as personal mobility boost for the domestic two-wheeler industry is also seen receding. So that is some concerns that are rising over there. Now, obviously, looking beyond that, also the demand fundamentals for two-wheelers, according to JP Morgan, is still appearing quite vulnerable, and the margin headwinds also, like raw material inflation, facing pricing power, are emerging again. So that is some concerns over there on that front as well. Now, overall, they do not believe that the risk-return ratio or risk-return trade-off is quite favorable for two-wheelers and OEMs, except for Bajaj Auto, and that is mainly due to obviously the steep run-up that we have seen in the YTD, that's year-to-date run-up. So these are the concerns that are arising for there, and that's why they've downgraded Hero Motocorp to neutral. They've downgraded Eicher Motor to underweight stance, and for Bajaj Auto is the only thing where they expect that stock to do well. Overall, given its two-wheeler OEM valuations are quite attracting as of now, so only Bajaj Auto is where the company is still positive.
Thanks very much, Vinny, for filling us in with all those details. Getting a move on then, we've got an ET Now exclusive. Big buyouts is what we've seen in recent times in the startup universe, the likes of Byju's buying out White Hat Junior, Reliance buying Urban Ladder and NetMeds. And now we understand that Google as well is looking at a huge buyout. Let's take it across then to my colleague Nayantara Rai, who has all of those details. Nayantara?
Well, there's an ET Now exclusive where we understand from our sources that Google is interested in buying out ShareChat. Now, ShareChat had, of course, been competing with ByteDance, the mighty TikTok, and has seen huge traction since India banned Chinese apps. For example, ShareChat's user base jumped by 100 million since the ban on TikTok. It's in 15 languages, all of that. What we are now understanding is that Google has trained its guns on ShareChat, that there are advanced talks on. Due diligence is currently underway for ShareChat to be bought out by Google for $1.03 billion. That's a significant premium to what ShareChat had been last valued at in September of this year, which was $650 million. So not only is Google believing that ShareChat is already a unicorn, it's more than a unicorn. So we're being told a valuation of $1.03 billion. Now, ShareChat had been in a fundraising drive for some time. It wanted to raise about $200 million. That's when we understand from our sources it held talks with Microsoft. We understand from our sources it also held talks with Snapchat. Snapchat has seen a huge amount of growth in India in recent times, came out in Snap's the parent company's quarterly results when it was announced in the United States as well. But we're being told that right now it seems to be Google which is leading the race, looking to buy out ShareChat. Now, what's going to be interesting to see is that will all investors be on board? ShareChat does have some very big investors. For example, Twitter. Twitter invested in ShareChat, as had Elevation Capital, which was, of course, called SEF till very recently. You've also got high net worth individuals, from a Pavan Munjal and Ajay Sriram that are also a part of the ShareChat story. So for now, Google wanting to buy out ShareChat, advanced stocks on, like I said, for a significant premium to what had been last valued at. it is being seen as a answer of sorts when it comes to TikTok. It has responded well since India had banned all of those Chinese apps. We did, of course, reach out to ShareChat. It declined to comment, and Google is yet to respond.
Thanks very much for giving us all of those details. Let's take a short break. Be right back with more.